Alright traders, welcome back to this particular video, and in this video we're going to go through everything you need to know about a breaker block. Now in the previous video I took time to explain what exactly is a mitigation block, which is one of the 7 institutional reference points you need to know. Now there is a very slight difference between a breaker block and a mitigation block, which you need to pay attention to. You need to watch everything I have to show you right here so you can get the exact difference, because that is where a lot of the confusion comes in for most smart money traders. All right, now let me start by sketching what a breaker block is, and then we'll come back to our chart to spot them physically. All right. Now we have a bearish breaker block and a bullish breaker block, just like any other institutional reference point. Now, when you have price moving up in this direction, like this, price pushing and creating higher highs and higher lows in an uptrend, if you have price coming like this and having to push above, but then crashing down into this area, leaving this first point that was supposed to reject price. Remember, in the mitigation block we had something like this, where we had a failure swing and price crashing down, breaking this level, which is where we call a shifting market structure, before we expect price to come back to our mitigation block, which is mostly at this exact point. Let me show you, at this exact point. All right, that is exactly what we were looking for in a bearish mitigation block. Let me adjust it correctly so you can see. So it is on this that we wait for price to come back to our mitigation block and we go bearish from here. Now for a breaker block, there is no failure swing, but there is going to be a liquidity sweep on the left hand side of your chart. All right, now look at this, price pushing above here, like we are having a break of structure on the upside. And ideally you want to wait for price to come back to this bullish order block before you take your trade, probably from here, to continue the upward movement. But then price finally shifted structure right at that point, this area. This is where you got your shifting market structure, and price decided to come back to retest this area, and it continued to the downward side. That is what we call a bearish breaker block. All right, so the breaker block is basically the last sell candle on this regard for a bearish breaker, the last sell candle that price printed as it was going up to sweep liquidity above here and crashing. So always remember that the sketch is like this. You will push above and crash, and then come back to retest it before going down. Please don't forget this simple sketch. If you will forget anything, do not forget this powerful difference between a breaker and a mitigation block. So this is a breaker. All right, a breaker, it breaks above, basically taking out this and crashing. Mitigation does not break, it just have a failure swing and it crashes coming back. All right, make sure you watch these videos again so you can get the simple difference between a breaker and a mitigation block. So this is a bearish breaker, and for a bullish breaker is basically something the same with this, but in the opposite direction, price coming down in a downward price action, having this movement, and then you see price crashing above. All right, after sweeping liquidity, it always takes liquidity below before crashing above, or before going to the other side, creating a shift in market structure. On both a breaker block and a mitigation block, you're going to see a market structure shift, which is one of the evidence that there is a shift in direction, and you wait for price to come back and it takes up from that area. So the last bullish candlestick in this regard for a bullish breaker becomes your bullish breaker. All right, the last bullish candle as price was printing upward becomes your bullish breaker. All right, so let's do a very quick example and see. All right, I have a sketch right here. Now always remember the sketch is your path. All right, so price was coming from here to this area, it created this low and it take up again to this area, and here it is crashing to this level. What do we have here? Don't forget about the sketch in case you missed that. Can you see the same pattern we just drew right there? So right, we have a sweep of liquidity above that side, and the downside you have a shifting structure. All right, can you see it? Market structure shift. And which one is your breaker block? The last sell candle that price printed is your breaker block. The last sell candle that price printed, you want to notice that area and wait for price to come back, and you're going to take the trade from there. Basically, this is how to identify a breaker. I'm not showing you how to take the trade. Eventually, you're going to see how to take trade with all this information you are getting. All right, so this is it. Price pushing, retracing. Which one is your breaker? This guy. You're going to mark everything. All right, you're going to map everything in that. So let me just adjust this and make it more transparent for everyone to see. All right, so this is a bearish breaker. So as soon as price touches it, that is where we expect price to go bearish. And look at what happened after price touched that. Price crashed, coming back to touch it again, crashing down completely. So that is how a breaker is. Let me show you another example. All right, coming right here, here is another example of a bearish breaker block. All right, always look at this pattern. Look out for the pattern: crashing, having a retracement, and pushing up, creating this movement. That is your bearish breaker. Don't forget, always you're going to see this and you're going to see price crashing. Now, which one is your breaker? This guy is your bearish breaker. Look at how price came back. Price coming back to that area and it crashes down from that side. So that is basically your bearish breaker. Let me show you a bullish breaker block, and then I will end this particular class from here. All right, guys, so this is what I've seen on this particular pair. I wanted to see a bullish breaker for you guys, and I saw this price action, price coming, going up to that level, having this push downward and pushing to the upside. All right, so what do you call this? This is basically a bullish breaker. All right, all you want to see is for price to come back to this same area and then have a kickoff. All right, look at this. Notice how price came back to that exact point, this exact point, the last bullish candle that price printed, which is right here. Notice how price touches just the tip of that bullish candle before pushing up from there exactly. And we have price reaching up to this area, which is possible point of taking profit before price did anything else. All right, so this is just an example of a breaker block where you can see them and how you can spot them. In the next video, I will show you more of the institutional reference points, and you will learn more about breaker block in the training ground. Thank you guys for watching. See you in the next video.